Hello traders, welcome back. In this video I'm going to teach you how to read the market structure from higher time frame to lower time frame. This is going to be a beginner's guide to read the market structures from higher time frame to lower time frame. So if you're interested in this video, stay tuned throughout the whole video so that I can teach you everything in a beginner's level so that you can understand everything easily. To read the market structure, you have to understand time frames, because the moment you move from higher time frame like the daily, moving on, you can use the lower time frame as your 1 hour or maybe the 30 minutes to read the market structure properly. By reading the market structure in the lower time frame, it will help us to have a better entry and also to reduce our risk trading that pair. So from here, when the market is moving bullish, we will have new highs but without having new lows. Like meaning we will have a new high but we won't have a new low. So the market will eventually break new highs. As you can see from here, is breaking new highs. But the moment you see something like this happening in the market comes down to break this low here, that means we might be having a reversal. But you don't have to do this like always. Sometimes you can have maybe a double confirmation after the market has broken this low, because sometimes it can do something like this. Sometimes the market might move higher, break this low to make a higher high, come down to this area here. As you can see, we have a structure that is broken here, but the market can still push higher. This will be a correction in the lower time frame, being an expanded flat correction. So most of the time I like to take this kind of trades here, because you will see that you will have a demand zone here. So most of the time the market will manipulate this low here and then move higher. But sometimes it can still reverse from here. Sometimes it can still push higher and then drop. But you can also do something like this. Maybe have another confirmation here to drop lower. But in reality, sometimes it can still come here to this area and then push higher. So it can be something like this. It can be a correction in the higher time frame. So to avoid the such moves here, you have to be able to read the market in this area. If it is impulsive and then we are having this kind of move here, that means the market might still eventually push higher, and obviously the market will find a low somewhere here to push higher, to reject from that low before it can continue higher. So for now here we can see that we have our daily as our higher time frame, but the market in this area, when the market is moving high, we will still have some lower lows here. The market will do something like this when pushing higher. So you just have to understand that. So if we move on to the lower time frame from this daily here, like looking at this structure alone, like this part here, you will see that the market is doing a lot of rejections while pushing higher. Let's look at the 1 hour. In the 1 hour, we can see that the market is pushing higher, dropping lower. This is the first move here. I'm demonstrating this move that is pushing higher now. This is the first move that is pushing higher to make a higher high. We can see that we're having the same structure, but here is more complex. Not really complex, but we're having some higher lows, higher lows, higher lows. But here is just a straight bullish move, but here we're just having a zigzag move going higher. So from here, before the market dropped lower, we can see that the market broke this low here, and this move here, you will see it roughly around these areas here. You will see it here. So from here we can see that the market broke the low, pushed higher, dropped the low, and then pushes higher. So you might be thinking that, okay, the market is going to push higher again from here, but the market eventually dropped lower because this structure here is in the lower time frame. Even in here, this is the lower time frame, but the whole structure here is the higher time frame of the 50 minutes or even 1 minute. So to look at this structure clearly, we have to understand the internal structure of the higher time frame most of the time. So as you can see, even from here we have an internal structure. It broke this low, and eventually the market dropped lower, make a high, make a low, and then high again, breaking this high here. So we will expect the market to push higher from here, but the market didn't do that. It just tanked lower to tag another low here. Most of the time, to be on the safe side, look at your demand zones here, because the market is likely to come to the demand zone from this area, push higher, go lower, and then you can confirm your trade here that the market is likely to push higher from here. And even the structure here, we have an internal structure even in the 1 minute. So it just depends on which time frame you are likely to use in the market. So from here, as you can see, the market eventually continued to go higher. So right now we have this structure, but in the lower time frame, this structure here in the lower time frame. So let's move on to this area here in the 15 minutes. You will see it clearly. You see it's the same structure again. So even if we move on to the lower time frame of the structure here, you will see the same pattern, but in reality it doesn't have. When we move on to the candlesticks, you will see it clearly that the market is not always presenting what I am teaching you right now, because you will have a lot of messy things that is happening in the market, but you will see it clearly when we move on to the chart. So as you can see from here, the market breaks this low, eventually retraced back to drop from here. As you can see, this is the same structure over and over again, but you have to understand that this might even happen. And most of the time, if this is happening here, you are most likely to see a supply zone here. So even in here, you are most likely to see a supply zone here. This supply zone will be on the lower time frame like this here, and even on this one will be on the 1 hour time frame, and sometimes even on the current time frame that you are in at that current price. So to trade this structure, you have to find a demand zone after the confirmation that this high has been broken. Then you can trade from here, moving higher. So the same thing that is happening in here. As you can see, this is the lower time frame. If you want to sell, we will determine or try to find our supply zone in this area. I hope I'm clear on this one, because this video I made it before, but I wanted to share some of the information that I missed while making that video before. So right now I want to move on to a chart so that I can demonstrate everything to you guys.
In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below.
As we can see right now, I'm in the 4 hours time frame. Right now, let's try to find a structure here. We're having a low and a high here. We're having a low and a high and a low. As you can see, this one here is just a minor internal structure. And then we have a high and a low and a new high and then a new low. Like I said before, that you are most likely to see a structure over here. Then the market eventually pushed high. As you can see, we are having some internal structures here in the 4 hours until we see a break of the last low. And most of the time you will see that this high here doesn't even break the previous high here. So let's move on. We can see that right now we have an internal high and a low and a high before the market pushes lower. So from here, even if we move on to the lower time frame, we will see another internal structure here. Let's move on to the 15 minutes so that I can show you the same thing that is happening in the market right here. From here, let's start to read the market right now. We can see we have a low and a high, a low and a high and a low. And within this structures here, even if I go to the 1 minute, we will still find the same structure again. So right now we have a high, an internal structure, and then a high, a low, a high. So we can clearly see that this is a 15 minutes high. So that is why you can see that this low is holding price to the upside. This one here is just an internal structure pushing higher, and clearly, and we can see that we have a high here, a low, a high, a low, a high, and then we have a low. So we can see clearly that this low here is broken. But here there's a multiple of internal and higher time frame structures here, but you don't have to worry about that. Let me show you. And then we have a high, a low, a new high, breaking this over here, and then the market dropped lower. Why did that happen? It's because we can clearly see that we have a zone here, and then we clearly have a higher time frame zone on the 4 hours, because right now we are on the 15 minutes. So let's do it. We can see that we have a low here and then a high, a low and a high here before the market dropped lower. As you can clearly see, this low was holding price to the upside, but it didn't push higher. The market just dropped lower to break the structure and then retested back before it can continue lower. Now that we are on the same area but in the lower time frame, I'm on the 1 minute right now to show you the same structure again. As we can see from this area here, this is the same structure that I have demonstrated to you in the beginning of the video. You will see it clearly. As you can see here, we have an impulse to the downside. This area here is just a correction, because we can clearly see that this move here is very impulsive and this one here is just corrective. So we can see that we have a low, a high, and a low, and then a high. Obviously, if you are looking at this, you will try to buy from these areas here, but the market dropped lower. It's because the market manipulated this high here, and all in all, we have something like this in the higher time frame. It's just something like this in the higher time frame. So if you want to enter from this complicated chart here, you can clearly see that the market broke this high here. We can clearly see that the market shoot up to the supply zone here. But what I like to do in this case from these areas here, I like to use even the failed demand zones. So this will clearly give me a better trade to enter the market. So even if this first trade failed without noticing this one here, you can clearly enter at these areas here, because we can clearly see that this here is a low. It was broken, and then you will enter when the market touches the zone here, stop loss here. If you don't know how I make my entries, go check out my previous videos. You will understand how this trade is entered. As you can see, this is a 1:23. So to close this video, I want to say that please go and backtest everything yourself, because in that way it will improve you as a trader. Because I can guide you, but even if you don't backtest, there's nothing that is going to help you at all. So if you backtest a lot, you will eventually improve as a trader alone, because you don't want to be depending on other traders just because you want to be profitable. Just learn to do things yourself. So guys, I guess I'll see you on the next video. Please consider subscribing to this one. Also share the video, guys.